Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live at sktrading.live or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hi everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. Wow, what a day. We had a great morning, some really great patterns early on, but then around 11:30, 12 o'clock, it was like watching paint dry. As I expected, because at 2 o'clock, we had the minutes for the FOMC. The rate decision, as I expected, was unchanged, but it was the press conference at 2:30 that really got the market all bulled up. And what happened was today, was that during the press conference, the Chairman Powell decided to state that he's expecting 2 interest rate cuts in this year alone. But the other members seemed kind of hawkish still, but the market didn't care. The S&P futures were trading 56.92 and traded all the way up to 57.70. A monster, almost 78 handle point rally on the S&Ps. And then they got absolutely kabooshed. The NASDAQ futures were trading above the 20,100, dropped over 150. The S&P futures were trading 57.70, and they got absolutely kabooshed all the way down to like 57.29. They dropped roughly 41 points in 4 bar. In 20 minutes, the S&Ps dropped over 40 points. Wild volatility. I love it. This is what every trader wants. When you see these type of moves and these rallies, and there are so many things I'm going to show you today. Really great patterns. The spiders reversed to buy on the 15-minute time frame. It correlated with the 60, so you had a buy disconnect. So I knew the market had some underlying strength. The Qs reversed to buy. Also, the Russell reversed to buy on the 15, correlating with the 60, as did the Dow. The Dow closed up about 400. S&P is up 65. NASDAQ futures up 270. Early in the morning, we saw Apple get a really monster move from 414 to 418.50, then got absolutely kabooshed. I'm going to show you that pattern. But there's so many things here I want to show you that are really, really important. And so basically right now, again, they're looking for 2 interest rate cuts for this year. I think that's solid. I thought 3, but he's already confirming potentially 2. So let's get right to the charts, okay? And I want to show you, first of all, the volatility. This is the move up today. And I have a special request from someone in my community asked me, so I'm going to start off with this. After we had this big push up here, when the S&Ps were trading at around the 57.70 level, I'm going to actually hold the bar over this, okay? If you can see here, the algorithm, if you see minus trend in orange, and right there, 57.45.25. Just remember that number, 57, okay? 57.45.25, okay? That's the price where the algorithm indicator 4 would reverse to sell. If you come up here and you click here, and again, TEZMA, you can see the price is 57.27.39. That's the distance where that's not the distance, I'm sorry. That's where the moving average is, the 10-bar weighted moving average. So basically, what I found out, okay, over the years is that whenever the algorithm is higher on the move over the moving average, which means if you get a pullback, the algorithm would reverse to sell first, and it's 8. This was 18, right? This was 27, almost 18. 57.45 is where the algorithm would reverse to sell. The moving average came in at 57.27, so the algorithm was 18 over the 10-bar weighted moving average, not the price to the moving average, which is the numbers to the right. It's where the algorithm indicator 4 would reverse to sell. So obviously I'm looking for a pullback into that 10-bar moving average. So as it happened, it did. We got a 40 handle drop. The price went below the moving average and then shot up about 25 points on the S&P, as I expected, that the algorithm would reverse the sell first, which set up the long. So when you see that the algorithm is 8, 10, 12, 14, 18 to where the moving average, which means if the price drops, which it did, the algorithm indicator 4 is going to reverse first, and then eventually it will go orange, which it did, meaning orange over blue, and then it would touch the moving average. That's exactly what happened. Bing, bingo. This was Christmas right here, okay, in March. Right here, dropped 44 points on the S&P, and then we stayed long here, okay, and look what it did. Boom, 28 up. Wild, 44 down and 28 up, and then from here, I just threw in the towel, right? 54 and 54, dropped another 20, dropped another 27. Unbelievable. 44, 28, and 27. That's wild. That's wild. That's over 100 points on the S&P. 44, 28, 27, absolutely. NASDAQ, forget it. NASDAQ had to be probably close to 300, okay? When you see patterns like this, okay, and obviously it's an aberration, it's the FOMC type day, but, you know, the volatility is here, right? And I tell people all the time, don't be scared of volatility, right? As a trader, you want volatility. That's what the charts do here for you, to be able to alert you and guide you and give you the confidence to trade. That's the most important thing, right? That you need to be able to understand this, to be able to see it, and to be able to visualize the pattern. You have me as a mentor. I'm coaching you. Now, none of you would know that strategy. None of you. Okay, it happened today in Apple when Apple was trading at the 218.30, 218. I'm saying, let them have them. I don't care if we're short lower. I'd add, right? Apple was $2.60, and I'll show it to you, $2.60, where the algorithm was above the 10-bar moving average. That means that the algorithm would reverse to sell first before it touched the moving average. Apple went from 218.30, I believe it touched all the way down to 214. Dropped over 4 points. Got absolutely kabooshed, right? So these strategies happen when you have a big rally, and then when we have big declines, it's the other way around. And so in this case, Apple and the S&Ps were perfect. Now, again, this is something that I realized over the years. I started seeing this. I'm like, this is going to drop. And I would say that the percentage of this winning is probably close to 100% based upon my research. That when you get this type, especially when you are 18, sometimes they're 8, they're 9, they're 10, maybe 11 or 12, but 18, whew, let them have them. Unbelievable. What a day. What a day. Okay. Now, I want to show you this pattern on the spiders. So the spiders reverse to buy on the 30-minute time frame right here. You see this at the end of the day. Now, here's also another strategy, okay? Watch this. When the algorithm, okay, reverses to buy and the MACDs are above the pivot, this is another reason why I called shorts. This is a set strategy. When the MACDs are above the pivot on the 15, 30, and hourly, and the algorithm reverses to buy on the 30, which is my most powerful pattern when the 30 reverses to buy. So the 30 reverse to buy correlating with the 15 and the 60, which is bullish. But the MACDs are above the pivot on the 15, the 30, and the 60. You can see the 60 is bullish. Never went negative yesterday. The MACDs are above. You made new highs here. The MACD did not confirm. Wow, so many things here. Okay, the MACDs did not confirm the high. Okay, boom, they dropped, right? That's number one. Number two, the 30-minute The MACDs are above the pivot on all three time frame. The algorithm reversed the buy. You take the short, that's 2. And then the algorithm, okay, was higher by 18 on the moving average. So you had 3 monster patterns there. Making new highs, the 60-minute MACD didn't confirm. 1, 2, all 3 MACDs, 15, 30, and hourly MACDs were above the pivot. When I look at that pivot line, I always see I'm looking for more sell divergences when the MACDs are above the pivot, especially we're in a negative trend on the daily and the weekly charts right now. When you got that overbought reading, when they were pushing up like that, let them have them. And then they dropped. And then the last one, the icing on the cake, this goes out to Katrina, right? She asked for this, okay? Again, when the algorithm was 18 above the 10-bar moving average, I knew they were going to drop. And boy, oh boy, did they. All right. Now, what's the next strategy? What's the next strategy, right? After the 30-minute time frame correlated with the 60 and it correlated with the 15. You buy the first pullback on the 15 you buy the first pullback on the 5-minute time frame. 30-minute time frame correlates with the 60 on the spiders. Now you're in a trend. The 30-minute time frame correlated with the 15. You buy the first pullback on the deep oversold condition on the 5, and this is exactly what happened right here. So here we see the 30 reversing to buy. It correlates with the 15 and 60. Look at the pullback here on the 5-minute time frame. This was an absolute Picasso. It went below the 10-bar moving average. You wait for the deep oversold condition, and look what the SPYs did. Boom, close to $3. Okay, that is an absolute set strategy. Absolute set strategy. Hands down, Picasso. Absolute phenomenal, great pattern. If you look here, I'm going to show you Coinbase. Coinbase had not the same pattern. Coinbase had a buy disconnect, okay, with the deep oversold condition. Same thing with MSTR. MSTR reversed to buy. It lined up beautifully on the 30-minute time frame with the on the 60 and on the 15. And let me show you how these patterns repeat themselves. If you look at MSTR here, here's the 30-minute time frame. It correlated with the 60 right here. You can see this right here. Boom. And then if you look at the 15-minute time frame, the 30-minute time frame reversed to buy, correlating. This is the first pattern. You can't buy this. This is right into the FOMC. But this would have been the pattern, okay, that you buy. If the FOMC minutes didn't come out, after the 30-minute time frame reversed to buy and it correlated with the 60 and the 15, you buy the first pullback on the 5, the second pullback on the 15. And that's exactly what happened at 2 o'clock. But because the minutes were coming out, you don't jump in front of a freight train, okay? This is an absolute phenomenal pattern right here, okay? But now, watch this. Now that I know that all 3 time frames are aligned, okay, here's the pattern that you look for. The pullback on the 5-minute time frame right here. 300, 301, boom, $6. There you go. Beautiful deep oversold condition on the 5. The algorithm reversed to sell. All 3 time frames are still in buy mode. And that is an absolute phenomenal long pattern. Everything pulled in beautifully at 3:30 to the T. Now, MSTR had the identical same pattern as spiders. The 30-minute time frame reversed the buy, and it correlated with the 60, and it correlated with the 15. But watch this now. This is a buy disconnect, which is Coinbase, okay? Same type of pattern here. You can see Coinbase here, negative on the 60, positive on the 30 towards the end of the day. It correlates with the 15. You have a buy disconnect, 2 out of 3. 30 correlates with the 15. What do you look to do? You buy the first pullback on the 5-minute time frame. An absolute Picasso. Could have bought 188s, 189s, 189.30s, and it ran $3. What I teach here each and every day is the ability to learn the strategies. based upon the 5 conditions. The 5 conditions are all predicated on the 3 time frames, the 15, the 30, and the hourly. So many people over the years have said to me, Steve, your indicators lag. And I say, you're right. Absolutely, indicators lag. Who am I to argue? You're right. Price leads, indicators lag. But my way I built the software took me nearly 10 years of my life. Once the patterns are set, once the indicators are set based upon pure mathematics, pure technical analysis, it's now hardened. And it gives you the ability then to do what? To be able to see the condition and trade off that pattern. As I gave someone an example today in a webinar I did, if you're building a walkway and you frame it all out, and the cement truck comes and they dump all, 5 yards of cement to make your walkway, and then you start leveling it off, making it nice and smooth. You can't just start walking on it after you make it smooth, because you'll be sinking, you'll ruin your shoes, you'll be up to your ankles in cement, right? And I told you this a couple of days ago. But once it hardens, guess what? You can walk firmly on it. I'm confident that when my indicators are set and I can identify the conditions, then, and they're all based upon divergence patterns, then you jump right in. You jump right in. So today, a wild day. Love it. So many people did well. My phone's been blowing up all day. I'm so proud of everybody in my community. This gives me such great joy, I have to tell you. I give it my all. Today is just a really remarkable day in the sense that when you're trading the markets, you want to have someone that is experienced, that you think I really care about volatility, but I've seen everything in the 41 plus years. I'm used to it, right? So, and then to have me with you, alongside of you, that you're not trading alone, and you also have technology, software that can guide you, and as I'm explaining things to you when the markets are happening dynamically. I believe in dynamic learning. I'm a visual person, right? Don't read to me. Don't let me sit in a classroom, listen. I am dynamic, okay? I'm not going to read a book. Somebody writes me a text, more than 3 words, call me. That's it. That's why I ask 2 words, call me. I call the person. Don't write me this. Somebody wrote me a 300 word. I counted over 300 words. I went like this. Delete. I'm not reading it. I said, call me. That's it. It's important, that I want people to be proactive. I want people to understand what I'm doing. I want you to be able to change your life in doing this, okay? So for me, it's important to understand when I speak to people new, what their faults are, what their struggles are. A lot of people coming to me asking to learn futures. People are getting a little frustrated with options. I'm not going to mention his name, but one of the biggest traders in the world will not trade options. I don't like options. Why trade options when you have futures? Why do I have to look at if I'm shorting or trading Tesla? I trade the stock or trade the futures. What I got to look at a whole bunch of strike prices. But to each his own. That's me. Some people love options, and so people have no other choice. And some people say, I like options because I don't know futures. Okay, so you learn futures, right? You learn, right? To me, it's the greatest asset in the world, whether it's commodity futures or index futures. To me, it's one of the greatest assets there is. Palantir was a good short at the end of the day, making new highs, non-confirmation. Caught a really great short, and NVIDIA at the end of the day dropped over 2.5. Meta got kabooshed off the highs. Avago was above 197.5. That dropped over 2. AMD dropped over $1.30 on that big spike down. Again, remember, the weekly charts on indicator 4 flipped negative on this Monday, which was Friday night. Okay, so when we came in ding, ding, ding on Monday, the algo reversed the sell on indicator 4 on the weekly. The Qs reversed the sell the week or two before that. Based upon my research, you're not going to go from a negative algo flipping on the weekly to a positive the next week. It ain't happening. Okay? If you look at the Russell, the IWMs, and I'll show it to you here on the weekly, you can see the Russell has been in a negative trend on the weekly. Look at this pattern, overbought into the negative MACD. Oh my God, 230. Right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. 11 weeks, the Russell's been a negative trend. So the one thing about the Russell that I like is that the MACDs are below the pivot. So maybe you get maybe one or two more push downs, but I'm still looking for 6,500 by the year end, about 800 points higher from here. It's going to take a lot. There's a ton of overhead resistance. It's going to take some really good news, probably sometime in the late second quarter, early third quarter, we'll start seeing this move upward. Again, my target 6,500. I've been saying this since August of last year, September of last year. And I think that for me, the most important thing is you trade what you see, right? You trade what you see. So when we get back, I will tell you what I'm expecting for tomorrow. Tomorrow, there's no 8:30 number. Okay, markets are going to digest. The weeklies, this 30-minute time frames reverse to buy on the Russell, on the Qs, and on the spiders and the diamonds on the 30-minute time frames. There's a 10 o'clock existing home sales number, really not that big here. All right. Again, I'm looking for a push up to 57.80, 58.50, 58.30 area. We could go to 58.80, go 50 over the 10 bar. And then I think they get kabooshed, okay? Normally what happens is that when the weekly reverses to sell on the spiders or any time frame on that weekly chart, you get a push up, you get overbought on the daily, and then you get a drop, a sharp drop. We could retest the lows of 5,500, maybe we go a little lower, but ultimately that 537 number is a monster number on the spiders. It is the where the monthly would reverse to sell. So I don't think that's going to happen. That's more than about 300 points here. It brings you down to 54, about a little bit below 5,400 on the S&P. But for tomorrow, what I'm looking for is a pullback, probably on the 30-minute time frame. The MACDs are positive here. So basically what I'm looking for tomorrow is a pullback here on the 30-minute time frames on Coinbase, MSTR, Qs, spiders, diamonds, Russell. And for me, I think the most important thing is that, again, the volatility is here. Let's trade what we see. If we do get a push up tomorrow and we take out the 484.10, that seems far right now. That's 4 points, 3.5 points on the Qs. If we do get that, again, the MACDs are above the pivot. If we get overbought conditions on the 30 and 60-minute time frame when the MACDs are above the pivot, especially we're in a negative trend on the daily and the weekly, I would look to short them, and then I would look for a pullback. If we trade down tomorrow, we get deep oversold conditions, I would look to buy them. If we gap up tomorrow and they stay up, and we get these overbought conditions on the 30 and 60-minute time frames, I would look to short them. Okay. When I get back, I will tell you something that I think you all should be looking at, especially in early mornings, and I think you want to hear this. So a lot of you have come to me over the last few months and said to me, Steve, I'd like to learn how to trade futures. And, I will tell you that, again, it was one of my favorite, it's the favorite asset that I like to look at. But one thing I will tell you is that in the early mornings during the European session, or we call it the pre-market before the U.S. market opens, between the hours of 6 and 8:30, 9 o'clock in the morning, there are phenomenal patterns to learn and to trade. I have people, a person in Thailand. I have people all around the country in trading the pre-market. Just a couple of days ago, there were 3 great long patterns on gold and 3 great short patterns on the S&P. Day over. If you caught 3 to 4 points on the S&P on all 3, that's, say, I'll go 9 points. And gold, I think it was 3, and I think they went 6, and 5. Even if you caught 3 and 3, you made 9 points, just for example, on gold, and 9 on the S&P on the short, 9 on the long on gold. That's 18 points overall. There's so much money, in my opinion, to be made in the pre-market using my software. And it's important to understand, right, that even if those of you in different time zones, looking at the European markets or looking at the Tokyo market, sometimes I'm in here till 10, 11 o'clock at night, and I'm looking at the Tokyo markets, and I see great patterns. Today, phenomenal pre-market pattern in gold. Monster pattern, monster long, ran about $6 around, I think it was on 8:15 in the morning. Beautiful 15-minute time frame, reversed the buy on my indicator 4 and pushed up, pulled right into the 10-bar moving average, and then right back up. I think it was $4 to $6 on gold. So one thing I want to make you all aware of is to be able, if you're really looking to trade futures, this is the place to learn. I'm willing to help each and every one of you. And if you really are trading futures, please look at the pre-market. I have told so many people who have told me that by 9 o'clock, 9:30, they're done for the day and they've hit their goals. And it's just so rewarding because there are some great opportunities. Again, you got to be careful because there are 8 big red numbers each and every month at 8:30. So just something to be aware of. I just wanted to bring it to your attention. If you are trading futures, or if you want to trade futures, just look at get the data for the S&P futures or for gold on your Trading View or TradeStation charts. Watch these patterns and you'll see what I'm talking about. Okay, I am Stephen Kalayjian. Thank you for joining me here on The Bull, the Bear, and the Ugly. Please subscribe to my YouTube channel. Please leave a comment. You can please follow me on X at Steve Kalayjian, and you can join me in my community on sktrading.live. Please join my community. We're a great bunch of traders here. Everybody gets along. We all try to help each other, and I want to help you. And again, my legacy depends on your success. My cell phone number is 914-500-7484. Please text me if you're interested. And I'm happy to talk to you. And right now, I want to say thank you for joining me here today. God bless you, and God bless the United States of America. Be well, everybody. See you tomorrow.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.